Coming to you from the floor of the CME Group, I'm Eric Wolfman Wilkinson. It's Wednesday, Wolfman Wednesday, November 30th. All right, let's get in the zone, the cash money zone. All right, listen, big day today. We had all kinds of stuff coming out, but yesterday I tweeted out the treasuries, all kinds of put buying. Every bank in the world was basically buying puts on treasuries. People were asking me, what's this have to do with anything? I was like, well, tried to wrestle around with this for a long time. I thought maybe it was just speculation on the unemployment number coming out on tomorrow. But it comes out today, well, we're bailing out the Eurozone. Take that. All right? Listen, what happens is there was a consolidated effort between all of basically the Fed, the Bank of Canada, Bank of Japan, the Swiss National Bank. All these banks came together and decided, well, we're going to bail out Europe. Well, what does that mean? That means that Big Ben has gone global. Take that. This is what's happening. The Fed has 17% voting rights in the IMF. We've decided that because the Eurozone can't come up with austerity measures, can't decide whether or not they're going to print money because, or actually has a refusal to print their own money to bail themselves out, we've decided that the taxpayers, or the Fed has decided, the taxpayers are going to pay off the European debt. What does that mean? Well, the pigs are getting off the hook. They have all this debt. The Greece isn't even paying taxes. We are going to pay off that debt, hopefully so, and then in the meantime, it doesn't give them any incentive to change anything. It's QE3 gone global. All right? Take that. Now, the next thing is you can check out this Gartman letter that was sent out to us earlier today. The Gartman letter is talking about the time bombs that's going to go off. All of these debts coming due. Are they actually going to be able to pay off that debt? And if they don't pay off that debt, who does that fall back onto? Well, because we've decided that we are going to pay for the bailouts, it's going to be on the taxpayers' backs of the United States citizens. Well, we're already in a problem. We can't even figure out our own way out of this. What's that going to do? Well, it could create stagflation, considering that commodity prices have jumped off of this. Everything is dollar related, has gone through the roof. Oil's back above $100. Corn yesterday went above $6. It's starting to rocket up further. I said it was going to trade up into the mid $6 range yesterday on a tweet. It looks like it could even go higher than that. Well, we're going to take that. All right? But you have to read this Gartman letter. It goes over a lot of this stuff, talking about, well, would you have voted for this as the American public? I don't think so. I don't think anybody wanted to bail out anybody in the first place in the United States, and now we've gone global to bail out all of these banks. We're printing money to put in these banks' coffers in order to try and get them to lend out to businesses, homes, and stuff like that, to try and spark this recovery. Well, what's happened in the past is probably going to happen in the future. These banks are using it to make trading practices, actually, to try and recur their profits. It's i.e. Corzone, the profits there, gone bust. Well, what do we have today? We had a couple good economic indicators. Chicago PMI came up pretty good. That's good for the public. Well, the problem is one of the biggest ones was we saw that the housing prices are really starting to come down. Year over year down 3.6%. Just last month alone, 6%. This is really going to make commodities, kind of go up and down. Stock market's gone blasted through all my levels. I haven't had a chance to recalculate everything, but it's good for the stocks right now. But is it good for the economy? I don't know. We might see a pullback if this starts in the next couple months if things don't work out the way they want to. Take that. Have a good one.